Getting a home loan does not require you to have absolutely perfect credit. You may be able to have had collections in your past and still get approved for a mortgage. It all depends on the type of debt you have had, how much there is, and the type of the lender and the loan you are attempting to get. Hello, my name is Keran Fears with Homestar Financial, and in this video we will cover if you can buy or refinance if you've had collection accounts in your past. Let's begin by talking about how collections will affect your ability to get a mortgage. Mortgage lenders depend heavily on your debt-to-income ratio. One of these ratios deals with your potential housing cost and the gross income each month. Your debt-to-income ratios lets the lender understand how much you can afford considering the amounts you need to pay to resolve your collections. The other deals with your total debts and payments each month. These monthly debt payments can include student loans, car payments, credit cards, child support, alimony, and the current mortgage that you're trying to get. The magic number for most lenders is debt-to-income ratio, DTI, below 43%. Next, let's talk about derogatory or late credit and how it affects your ability to qualify. Derogatory credit. When determining approval for a mortgage, lenders may cap the amount of derogatory credit that you can have in order to qualify for the loan. This includes items like collections, charge-offs, judgments, and liens. Collections and charge-offs are not usually figured into your debt-to-income ratio unless you are currently making payments on those accounts. Tax liens and judgments are two items that must be satisfied before you can be approved to close on your home loan. Those with tax liens may be able to close if there's a payment arrangement set in place and monthly payments are paid on time. Next, let's talk about what to do with collection accounts. We will begin with new collections. What to do with new collections. Before you do anything with any collection account, you should always check with your lender. If you are going to pay off any new collection account, you want to be sure to get a detailed payment arrangement in writing before paying anything. The arrangement should detail the total amount you will be paying, the number of payments you will have to make, when the payments are due, if there's any collection fees or interest added, and what will happen at the end of your payment term. How about older collection accounts? Old collections, the first thing you need to do is to make sure that they are yours and it is on the credit report correctly. If not, you need to send requests to all credit reporting agencies asking them to delete the accounts. If you have determined that the information on your credit report is correct, it is time to figure out what you will need to do with the debt. Paying off old collections can do more damage to your credit score. While it's great to get your credit report cleared, paying off an old collection account will bring the report current. This can drop your credit score and affect your ability to get a mortgage with collections. The only way paying the account will help is for the collector to remove the collection from your credit history, called pay for delete, and understand that all lenders allow a certain amount that they may be in collections for the borrower. It may be better to just keep your current accounts current with your balances below 30% on their maximum. Check local statute of limitations. Collections are 12 months or older do not affect your score. You also check this with your state, the statute of limitations on debt collection. Usually this is 3 to 6 years. Don't reactivate the account. Having collections on your credit score can do great damage, but the effect that collections have on your credit score diminishes over time. When you start paying off these old debts, you bring the account to the forefront again. If you have student loan collections, you will want to check with your lender to see if you can qualify for a mortgage. Defaulting on a student loan can put a hold on your dream of homeownership. Federal student loan debt is not dischargeable and does not have a statute of limitations. FHA mortgage loans will certainly not be approved for anyone with defaulted loans. If you have defaulted, there are options to get back on track. These include loan rehabilitation, loan consolidation, and loan payment in full. How about medical collections? With medical accounts, credit bureaus must remove paid accounts from your credit report within 45 days. Negotiate with these collection accounts in writing and wait for a signed agreement before paying the account. Mortgage underwriters may not require that all old collections be paid off, but they will most likely require a letter explaining why the accounts are in collections. Can I buy a house with collections? Knowing where you stand and getting a handle on your credit report early is important. Get a full picture of your credit and create a strategy to make improvements. But know that while challenging it is possible to be approved for a mortgage with collections on your credit report and to buy a house, the most important thing to do is to know what is on your credit report and create a plan. Be sure to get your questions answered by a licensed mortgage professional. Thanks for watching. This is Keran Fears with Homestar Financial, and if there is anything we can do to help answer your questions, please do not hesitate to contact us. We are here to help. Thank you.